Alrighty, guys. Good morning. Welcome to this Monday, April 7th, and market is maintaining its hissy fit state. That is the official analysis. So far, we have a massive gap down at the open. They ran it, and you can't even look at the F2 anymore. I had to look at the F4, and that looks like a big long stripe like this. So, so we closed around about 5,100 on Friday, after the massive sell-off. They started off that one way up here at the 5,400s or something like that. I think they and ran it all the way down here to the 5,100s. They were all the way down into the 55,070s on Friday, and a gap down at the open in the overnight. And literally, right at the open, you see there was crazy action. They ran it all the way down here to the 4830s. So that's how far, 4830s on the ES. That's how far they took it. Now they retraced quite a bit of that, but it's been a crazy overnight in terms of volatility and going back and forth. So this analysis is going to be pretty much stay out of the markets. I don't think there's no point of trading this at this point when it is as crazy as this. So also you should have been getting margin announcements and margin updates. I got one from AMP, several of them actually, but they are back. They're setting basically they are setting the day trading margin the same as the maintenance margin. So, and that means for the micros, and I can only speak for the let's see, live trading. This is the AMP announcement. So the micro Nasdaq is $2,900. The micro ES is like 1990, like almost 2,000. So to trade a micro contract, you need to have $2,000 on the micro ES and 3,000 on the micro Nasdaq. So, and that used to be 40 and $50. So you can imagine what they are, the massive issues going on the brokerage side. For the full size ES, you need 20,000 and 30,000 to do this. So, not trading this today. So it's pretty crazy. So at this point, we're pretty much sitting here twisting in the wind, waiting for this volatility to come down. I would love to be able to trade this, but with additional margin requirements now, it makes it pretty much impossible to trade unless you're going to have a huge account and have massive stops. But I don't trade like that. So, and you can see here on the F2, I tried to draw up some levels. It's I'm chasing down a little bit of an issue here on the log and on the new execution side of things, but and that's a side issue. On the markets though, I'm just looking at the point I was making. I restarted the platform early on to see if it fixed itself, but it didn't, and then I'm just watching. I had to sit and wait for this to load back up again. It's like, man, this is taking forever. And yeah, because it's so much data. And looking at the ES, micro ES, I rebuilt this chart, right? Yes, this chart, 1.1 over a million contracts traded on the micro ES. That's like less than 100,000 normally, all right? So we're looking at 10 times the size of the volume right before they open. And so I did not much else to say about it. I would focus on the short side. But you never know when that rip-roaring snapback happens, and you don't need much. You can have a couple of deals come together, and you can start seeing that how things start shaking out, and the market's going to just turn on a dime and start running higher. At this point, I think the market is still in a hissy fit mode to the downside. But if you try to trade this volatility, I mean, they gap down all the way down here to the 40 and 800. They snap back up here. So it's 100 and almost 200 points range today on the trading session, yeah, just for today on the ES. So that's just massive. So it can go back and forth. It can swing. It can even start testing the lows and even trade this lower. So anyone's guess where they're going to find support at this point. They've taken out all the normal support areas people watch, and it's just a bloodbath out there. So I would trade it with a lot of caution. I'm not personally going to trade at all today. I'm just going to sit on the sidelines and wait for this to come down and wait if I'm going to drop the margins down to something which is tradable. And when that happens, then I'll probably re-engage the market. But at this point, My advice is to stay out of it and let this whole thing calm down, unless you're really wanting to trade up a storm in a market like this. And I think the market like this, you can make a lot of money, but you can also lose it as fast if you're trading with the same rules as you used to, like a week or two back. So I would start off. I would stay on the short side until the market really starts showing some sign. But the volatility makes it very difficult to do anything with this. So that's the starting point at this point. So as you see, I don't have an account in the drop down. My execution side of it is not logging in right now. So at this point, that's kind of where we are. My advice: don't stay out of the market today. Don't trade it until we calm down. Start seeing some sort of direction. Now the news this week, just to get into that a little bit quick here, there's not much news to drive the market today. Tomorrow, small business optimism index, not much to going on news tomorrow. A 3-year auction tomorrow. Wednesday, if we get wholesale inventories at 10, very light news on Wednesday too. Fed minutes coming out at 2, 10-year auction on Wednesday. On Thursday, we have a 30-year auction. CPI, we had the CPI print on Thursday, and then we have PPI on Friday. So those are the two numbers for the week, I guess. But I don't think that's going to be that important unless the volatility and the craziness starts or subsides a bit. This is going to be just an untradeable market. So my advice: staying out of it, not trading it today, and I advise you to do the same. Stay out of it and don't expose yourself to this crazy stuff. And the other part of this is that you never know when volume picks up like this. You never know when your computer ends up lagging. You have a lag in a chart or something like that. You click in an order and suddenly you realize that oh shoot, things are not quite what I thought it would be. The only thing you can do here is you can compare what you're seeing in the symbol manager to what you're looking at the chart. They should match up. If they don't, you're lagging on your charts. So I've seen a lot of that stuff going on right now, and it happens on my machine as well. Things are not quite keeping up. All right, so that's the ES traded from the short side of the market. Unless they start closing this gap, if they start closing this gap and start trading up above this 50-70s, then you may start thinking about, okay, maybe it's a recovery thing going on. But unless the volatility starts slowing down, I think it's going to be as crazy as ever. So looking at our NASDAQ and the bond. So the NASDAQ is going to be the same analysis on the ES. Massive craziness going on there. They gapped down here. They gapped down on the NASDAQ. They were all the way down to the 16,400s. All right, and that's that's like 30% down almost at this point. So from 2,200, 22 something down to 16,000. That's where we are, almost 25% down on the NASDAQ. That is crazy stuff. So just don't look at your 401ks. Just ignore it. There's not much you can do, and the market is trading like this. Trust me, a lot of fund managers are blowing up left and right as well, and this is pretty crazy. So if they start closing this gap and above it at 17.2, 17.3, I would start thinking about maybe a market starting to recover. But at this, I'm not going to say. I'm not even going to engage. It's Nasdaq, the micro Nasdaq, $3,000 for one lot on a micro. That's pretty crazy. That used to be like 40, $50 for a micro. And that's nice, full maintenance margin. And that just tells you that a lot of people got themselves in trouble trading this. Now, tradable is bond market is tradable. So if you want to trade that's definitely a tradable market. So that guy is backed off a little bit from the highs. So they were all the way up here at the 121, 122s. And looking at my capital flow on the bonds. Let me find my capital flow on the bonds. They are way up there at the this upper range 122.22, bouncing up in this low volume area, and now they're backing off that. But massive move to flight to safety, backing off pretty good. That's an interesting dynamic. We'll see if they're going to hold this or they're going to start tracing it. But there's also a certain amount of volatility added to the bond market. But the fact that they're not flying all over the place just tells you that it's more of an equity market kind of deal here. And And the only good news I can see the bond market pulling back like this is that, okay, if there's a rotation out of bonds, maybe bargain hunting stocks, that would be a good sign. At this point, though, I mean, just trade it range bound. I would start off from the short side and see if they can retest this lows at the 119.23.24, maybe lower. Looking to sell strength up to this level, the 120.14s. If it starts trading above that, I'm taking off that short bias, going back range bound, and above that 121, back on the long side. So we'll see if there's a little bit more pullback than just an intraday testing these lows. It's taking out the lows from Friday and pushing a little bit lower. So that's why I'm starting off with a slight bias to the downside. So we'll see. But bond market is tradable. That is not way over the tops. And the other markets, oil and gold, are tradable as well. And gold is moving pretty violently, you know. So, but not as crazy as the indices are. So on the gold market, I would look at this. Let me see, gold. There it is. So gold closed Friday down at the 3050s, and they believe they gapped down all the way down here to that 2985 at the open, yes, in the overnight, and then right back up again, and then been going back and forth in this lower area. So remember, we were up here in the 3000, 3100 level. They have been reversed that all the way down here to that next step lower, if you wish. That's where they were building value for a while before that last pop to the upside in late March. At this point, I would stay range bound in this. I would look for weakness, but I would stay range bound in this range here. So if this starts trading above that 3060s, 3070s, I would look for the long side. And if they trade below the 2990s, I would hop on a short side and see if you can retrace this further. But pretty much trading in this range right now. I would start off though with a bias to the downside to see if you can retest these lows, because they pulled back pretty hard in the overnight and that's kind of holding right now. But if they start taking out that London low at the 30,030s, that would be an indication that we may see a retest of these lower support areas. So staying on the short side, or starting off with a short bias. If they can't take out that 30,030s, or sorry, 3,030s, before if they can't take that out in the day session here as it kicks in, maybe take off this short bias in a little bit, in a couple of hours here. We'll see how it develops early on here. But if they start heading lower and they blow through that 30s, then they stay on the short side, see how far they can take it. And of course, watch that 3063s up to that 3070s, the two resistance areas. If the both of them comes out, I would look for a retracement back up again. But gold is getting hammered too, and that was the hedge. People got in there, so maybe it's profit taken out of gold and rotation into equities, because there is some bargains out there now. I mean, it's if you want some stocks on sales, it's on sale. I don't know how you quite prepare yourself for this, but it's unless you're all cash and really patient. But then if you're sitting in all cash on stock and waiting for your opportunity, by the time you pull the trigger and realize that the selling is over, they probably retrace 50% already. So that's always the trade-off, you know. Everyone thinks they can time that bottom, but it's much harder to think, especially if you got burned on the way down and you're sitting on cash and you can't figure out when to go back in again. By the time you get your mojo back in and start buying, the market probably retrace 50%, maybe even more. So that's the hard reality of it. Okay, that's not what I wanted. So anyway, so gold, trade that, start on the short side, watch those upper areas, the 3060s and 75s, rotations back down. If those comes out, look for a retracement trade to the upside. And if they take out that 3030s, stay on the short side and see how far they can take it on the downside. Also, oil, tradable. That one is to the downside, hard to the downside, but not as crazy in its volatility as the indices are. I haven't checked the micro oil yet in terms of, and let me see, energy. We have a number on the micro oil. Energy is crude oil, meaning micro crude. Okay, 165 for the margin on micro crude. So that's not all the way over the top. So you can trade micro crude, that works. And the full size crude is like $1,600 for day trading. And this is for AMP futures, by the way. So if you're not trading with AMP, your margins may be different, but that's the SS gives you a reference. Anyway, so to the downside, big move to the downside on oil, and that's probably global recession fears, I would think, driving this to the downside like this. But I'll take it any day of the week. So let's see how far they can take it on the downside. So I'm looking to sell strength on oil for rotations back down. At this point, against the 60 70s, 61 20s, 61 50s, up to that 62s for rotations back down. If it starts trading above 62s, look for a potential retracement trade to the upside. See how far it can retrace this. But early on, looking to sell strength for rotations back down. I think we'll see how oil reacts. I mean, if the deal starts getting made and the fear of global recession goes away, then maybe you'll see a little bit of recovery on prices. But this is a good start. This is starting off repricing gold, repricing oil to the downside. So trade oil from the short side. I'm not going to be super aggressive on buying oil at this point, but the oil is definitely tradable today. So definitely a workable market. So trade that from the short side and look to buy against the 59.50s and 59s with a lot of caution, since we are in the move out of the middle to the downside. All right, so that's oil and gold. So trade oil from the short side, gold from the short side. Both of them are gold is in a range. So let's see if it stays in that range, or if they want to take this lower on gold, that is. And oil is in price discovery to the downside. So just trade that from the short side at this point. So what you can trade today is, at least on the markets I'm following nice, oil, gold, and the bonds, if you want to do that. I would not trade ES or NASDAQ until that settles down, unless you have a real wish of getting into it and really doing it up. But this is too volatile for myself. So 1.1 million contracts traded on the micro ES before we have open. That's usually like 100,000 or less than 100,000. So that just gives you a reference of how crazy this is. All right. So and that's for information. I'm going to be going in and out. I'm going to do some testing on this and exit in and logging in a bit. So if the charts go up and down, you know why. All right. So anyway, we'll wrap it there, guys. So good trading if you're going to trade it. If you're not, I would fully understand. I'm not going to get into this right now. I'm going to probably sit on the sidelines most of the day and see if I can figure out how this volatility is, if it's settling down or not. Alrighty, guys, we'll leave it there. So good trading, and I'll see you back at 11:30 for the next update. Alrighty, guys, later.